everyone, welcome to this special segment called as MC Pro Select Stock of the Day. I'm your host Nikki Mirchandani, and in this segment, like always, we bring to you fundamentally strong investment stock ideas. Today we're going to be talking about investor darling company, which is BSE, a distant second exchange in cash equities and derivative segment. The NSE continues to be the invincible leader, however, in the equity segment in both cash and derivatives. Having said that, BSE by the end of June had secured a substantial 6.4% market share in cash equity trading segment. Let's get to know more about the rally of this company, or the stock rather. BSE stock has shown a remarkable growth this year, more than doubling in value year to date. The stock has rallied nearly 110 on calendar year to date basis and 173% on for financial year to date basis. This surge can be attributed to several factors there, including a strong earning performance in Q1 FY24 and a revision in buyback price. Additionally, the change in leadership that took place in January also has played a pivotal role in driving the stock performance higher. Moreover, the initial success of BSE's efforts to boost trading volumes in the derivative segment has further contributed to its positive trajectory. Now let's understand what's working in the favor of the company. A couple of factors out there. Let's address the first one, which is new leader, bold moves. In January, Sundararaman Ramamurthy assumed the role of CEO, ushering in changes aimed at enhancing trading volumes. The new CEO has made strategic adjustments to the product offering across all three key segments, that is cash, equity, currency derivatives and equity derivatives. These changes reflect the organization's commitment to driving growth and innovation under his leadership. Let's talk about the second factor, which is a great start in derivatives segment. In cash equity, there has been a notable improvement in market share for stock valued below 100 rupees, rising from 9% before the changes to approximately 12%. Furthermore, the relaunch of a weekly index option contract Sensex in May 2023 has begun to yield positive results. BSE market share in the derivative segment has seen remarkable progress, surging to 4% by the end of August from near 0% in April. Impressively, the surge in trading volume has been accomplished without resorting to incentivizing traders through liquidity enhancement schemes. Additionally, if you talk about what we are looking at, presence BSE charges of rupees 500 per crore of premium on these recently introduced products. The management strategy involves leveraging these offerings to generate revenue in the future, with plans to monetize them once they achieve a significant scale in the market. Let's also look at the other factor which is working in the favor of the company, which is new business gaining traction. BSE operates as one of the largest mutual fund distribution platforms, Blue Star Mutual Fund. Additionally, it holds a respectable market share in commodities, INX, and SME listings. BSE EBIX, its insurance broking platforms, shows promise for future growth. While these segments are progressing well, it's important to note that apart from Star Mutual Fund, the others are still in a nascent stage. However, these emerging segments have the potential to translate into significant revenue opportunities in the future. Now let's talk about valuation bit, which seems to be a little pricey. Currently trading at 40 times estimated core earnings for FY25, this compares to a 15 times PE by unlisted player NSE shares, which are quoting at a price of 3,000 to 3,000 rupees per share in the OTC market. NSE is cheaper compared to BSE in terms of valuation, despite the much higher market share and also return ratios. Lingering uncertainty over IPO timeline in keeping NSE stock price range bound. Now, BSE valuations, however, can re-rate further according to MC Pro if it succeeds in breaking the vicious cycle of liquidity. Moreover, BSE has 1,400 crore cash, which is currently available for the shareholders on its book. Stake sale in CDSL has fetched another 500 crore for BSE. Payouts, be it in terms of dividend and buybacks, will remain healthy in the future too, according to MC Pro. In terms of risk, let's talk about that. BSE is vulnerable to weakness in equity markets and adverse regulatory changes, both of which can negatively impact volumes and profits of the exchange. Well, with this, it's a wrap. Thank you so much for tuning in.